you will talk about NCBA, you talk about Cooperative Bank, and then talk about APSA. Now, if you look at that trend from the lenders who gave us their results yesterday, you would have liked to think that indeed they would have not gone on with a trend of dividend cancellations. But you're wrong, because then majority of them have followed that trend that was started by Stanchart and Stanbic in cancelling the interim dividend. But let me just take you through what the biggest observations for the lenders who've given us their results have been. If you look at all of them, in fact, they're making it bigger than they were making it in the period that ended June 2021, because all of them are talking about improved cash positions, improved lending. But again, if you look at the costs across the industry, again, it has been reducing, meaning that indeed majority of them are making it big in the economy. So the question is going to be, why are they not then paying out the interim dividends if you have banks like KCB raking in 19.6 billion, equity 24.4 billion, and majority of them are actually getting in that good money? Now, the blame they're talking about is, number one, high rates of inflation. Number two, external shocks. We do know them. What we have seen, the Kenyan shilling standing against the dollar. In fact, by the way, this week it has been at the worst, because we did see it momentarily touch 120 before coming back to 119. But the experts will tell you, depending on when you're getting it, you could be buying it at even 128. They are also claiming that the market is quite uncertain, going by the impending petition by the Azimio coalition challenging the August 9th election result. But is that enough for them to come out and say, we've cancelled out the interim dividend? Today, the topic has been understanding the bank's interim dividend cancellations. And to help us through that conversation, I'm going to do a proper introduction before we come back later with him for that in-depth analysis. We're joined by the CEO, Black Bow Consults Limited, Arnold Ngasale. Arnold, how are you doing? Let me ask you this question just for 2 minutes before then we get into that conversation. Do you understand why the banks are cancelling their interim dividends despite what you call a stellar half-year result?
Thank you so much, Simba. First of all, I'm glad to be here. Thank you for the invitation. And number two, partly I do understand. If you look at the narrative from all the major banks, the narrative is the same. As you've alluded to, guys are talking about external shocks. Guys are also talking about an uncertain future, basically because of inflation. We've had a lot of inflation. If you look at month on month, from 2021 sliding into 2022, even as most of the economy reopened following dealing with the COVID-19 issues, we've had the same narrative. And last but not least, you've also alluded to the impending petition, which is going on in the Kenyan political scene, with a petition being lodged against the results which were announced by the IEBC sometime last week. So these are credible factors, and I feel that it's going to be a worthwhile discussion just to try and extrapolate piece by piece all of these factors. Of course, there are other factors which have led to inflation, including things like the invasion of Ukraine with Russia, which affected the commodities, which in turn also affected our country. These are some of the nitty-gritties which we may need to extrapolate so that we can have a clear picture of exactly why guys are not paying the interim dividend.
That conversation coming up later on Lookup Business. You want to join? You don't know what to do. Lookup TV across all your social media platforms. I am at Kiage Simba. Much more to come, so sit around. But for now, let's cross straight onto our business desk and see some of the headlines that are headlining the market right now. Now, half-year net profits for Absa Bank increased 12.9% to hit 6.3 billion on the back of higher yields from loans and increased lending to the private sector. Now, Absa profits under the same review period last year stood at 5.6 billion, with a realized jump in profits confirmed by Absa's increased loan book that jumped 44 billion to 262 billion. Now, central bank's recent review of the lending rate by 50 basis points has also seen the lender realize an increase in average yield to 10.4% from 9.5% last year, with the interest income accrued from the higher lending rate jumping up by 21% to 14 billion shillings. Now, the lender booked a 10% increase in non-funded income that touched the 6.4 billion shillings mark on a higher returns on the foreign exchange market, with a bank assurance arm, service and account maintenance fees also contributing heavily as customers' deposits increased by 7% to 281.6 billion. Now, despite the good result recorded by the lender, high staff costs jumped 11% to 8.8 billion, with the Absa Bank's loan loss provisions costs also recording a 52% increase from 1.9 billion to 2.9 billion shillings. Now, the bank CEO, Jeremy Awori, while announcing the result, indicated that the bank has plans to diversify revenues by increasing investments in asset management, consumer payments, custody business and investment banking. Now, into the next story that we're calling Bamburi half-year results shocker. Bamburi Cement has posted an 87.76% decline in net profit in the first half of the year ended June, a result the cement manufacturer says is a reflection of the current high cost of manufacturing. Bamburi Cement indicated Thursday that its net income for the period dropped by 681 million shillings to 95 million shillings, a huge drop from the 776 million shillings that was recorded in a similar period last year. The company indicated the reduced profitability was largely caused by operating costs increasing by 1.2 billion shillings to 19.7 billion shillings. In a statement, Bamburi indicated that the high cost of fuel prices, logistics and imported clinker prices in both Kenya and Uganda adversely impacted the operating profit, while also stating that the poor standing of the Kenyan shilling against the dollar was largely to blame for their reduced profits. The manufacturer's revenues increased by 505 million to 20.1 billion shillings in the review period, driven by increase in volumes across both Uganda and Kenya. Bamburi Cement did not recommend an interim dividend, joining the banking industry that has kept the dividend on the back of high inflation in the country, uncertainty of the just concluded presidential election and external market shocks. Constituency Development Fund NCDF board has now come out to dispel claims that its services have been scrapped after a recent ruling by the Supreme Court that declared NCDF unconstitutional. According to the board, the Supreme Court declared the 2013 NCDF that was operating through the 2015 Act, which has since then led to anxiety about the future of the fund. NCDF CEO Yusuf Mbuna noted that the government agency was operational, with the funds for this financial year having been increased from 41.7 billion to 44 billion shillings.
What happened is that there has been a pending matter in the court. In 2015, the High Court pronounced the then CDF Act of 2013 as unconstitutional, and the court gave the government a period of 12 months to correct the anomaly, which was done through the enactment of the current National Government Constituency Development Fund Act of 2015. And that is the act through which we are operating now. The matter in Supreme Court was about that act of 2013, which was annulled by the High Court, but the litigation has been continuing in 2017 through the Court of Appeal, and finally it ended up in Supreme Court. Now the Supreme Court, as the highest court in the land, has pronounced itself. So that means that that act of 2013 is dead. But the report that the fund is dead is inaccurate, because the fund has been operating from the year 2016, has been operating under the National Government Constituencies Development Fund Act of 2015. I can confirm that that matter in the Supreme Court was not about the 2015 Act, but the old Act. So the fund is alive, and that's why we are here in Doroton, Second School Naivasha. We are monitoring the projects financed by the government through the National Government CDF. For the current financial year that is just started, that is the 2022-2023 financial year, the allocation has increased from 41.7 billion to 44 billion shillings. And on average, that will translate to about 145 million per constituency.
Cooperative Bank Group saw its half-year profits for the period ended June 2022 jump 55.4% to 11.5 billion from 7.4 billion shillings last year on the back of increased lending. The result was heavily supported by an 11.8% growth in net interest income from 18.8 billion to 21.1 billion. Edwin John Mukora with the rest of the details.
Growth in customer lending and payment charges has seen the Cooperative Bank record an incredible 55.4% increase in net profits to 11.5 billion shillings in the year ending June 2022 from 7.4 billion shillings recorded last year. This was also majorly boosted by 11.8% growth in net interest income from 18.8 billion shillings in 2021 to 21.1 billion shillings in 2022. The lender's non-interest income grew by 29% to 13.3 billion shillings. Cooperative Bank has aggressively pushed loans to the mass market as opposed to government paper, a factor behind the jump in loans to the mass market from 29 billion shillings a year earlier to 330 billion shillings, with the bank's CEO Gideon Muriuki saying majority of the loans went to SMEs as to maintain borrowers. The bank's subsidiaries also recorded an impressive profit, with Kingdom Bank making a 48% profit before taxes to 405.9 million shillings in the second quarter of 2022 from 275 million shillings recorded last year. The Cooperative Bank of Sudan made a profit of 55.5 million shillings compared to a loss of 290.1 million shillings made last year. The bank also saw its net assets grow from 573 billion shillings to 603.9 billion shillings this year. Edwin John Mukora, Lookup Business.
Well, that is exactly what we have for you on the business desk this week. It has been results week. We're talking about the half-year results. There are other companies also on the NSA that have also been giving us the results, but pretty much when you're looking at the banking quarters, they are pretty done and dusted, just say for one or two that have also said they're going to release the results next week early. That means it's now time for us to look at exactly how the markets then have been responding to the banking industry's results. And I just want us to begin from the biggest gainers. Remember, it's been 2 hours, 22 minutes of active trading today. So let's go back and see exactly how we opened the markets this morning, meaning we're going to go back and see how we closed again. All right, let's begin from the biggest gainers as we opened or closed the markets this morning. And by the way, BOC has been really good on that. So we can talk about this. And this is the market really responding to what the banks have been doing, because on here you have NCBA, who's a new entrant. By the way, in that list, you can see now they closed at 27 shillings and 60 cents. That is a percentage of 4.35% increase. APSA, also a new entrant in this list. Now you can get it at 12 shillings at 3.45% increase. By the way, when you look at this, majority of the banking quarters have been recording increased profitability across the board. So it's no surprise really that we're seeing majority of investors then flocking the banking quarters. And we did see the shake that happened when Stanchart did not declare their interim dividend. We have not really seen that being a surprise news in the market, because it was expected after Stanchart and Stanbic, the majority of the banking quarters were really going to cancel that interim dividend. So it's not much of a surprise that we have two banking entrants here, NCBA and APSA, making that top 5 list in terms of the gainers from the market close yesterday. All right, let's move on to the next one, which is the biggest losers as well. And not so much, again, change, because this is exactly what we're having this week, especially when trading has been subdued with uncertainty in the market. This list pretty much remains the same, with the NSE again has been on the headlines this week, being a loser, a top loser as well, because now they're closing that list with negative 6.02% in terms of that stock decline. Let's move on to the last indicator, which is the biggest movers as well. And I'll be telling you exactly what we're doing now. Not so much of a surprise as well. For me, I'm looking at Safaricom, which you do expect would then carry on the trading on that. Safaricom, 1,614,000 shares traded in terms of volume. But then NCBA came in after the results with 105,100 shares traded. That is the talking point really when it comes to this particular result, because then we were expecting the banking quarters who've been giving us the results this week would also dominate the top movers list. So not so much of a change in that. But right now, remember, it's been 2 hours, 25 minutes of trading. Let's confirm how the markets are trending right now. NCBA is currently leading at 131,200. Safcom coming in at 96,400. APSA, 47,400. Cooperative, 35,300. KCB, 30,400. Showing you exactly where the sentiment is right now. Because if you look at where we are right now, it's just Safcom, which is not a banking quarter in terms of how the trading is going on right now. So 2 hours, 25 minutes of trading. In terms of the top movers, we do have the banking quarters leading that. And we do expect that that is going to be the sentiment in the market as we close the week's trading at 3 p.m. today. That is the outlook. Now, the question was, if indeed then the market is responding to the banking quarters in the country, and majority of them have recorded big results, by the way, huge results, some of them even experiencing 55% increases in profitability. Case in point, Cooperative Bank. Why would they turn around and say no interim dividend declaration? Is that the banking industry trying everything possible to hold on to their cash, despite those investors also needing that cash right now? Because if we're talking about inflation, if we're talking about external shocks, and the weak standing of the Kenyan shilling against the dollar, then the investors also do need cushioning, you like to think. Or is it so? Once we come back, we don't have Arnold Nkasale, the CEO of Black Bag Consult, who's going to put this into proper perspective once we come back.